gives me great pleasure now to welcome Mr. Sunil D'Souza as part of ET interview, and today we would be focusing extensively on the consumer demand post-COVID, what is happening to Tata Consumer and which way the company is headed in terms of taking a new rebirth. Remember, I just want to remind our viewers that Tata Global Beverages is now Tata Consumer. The company is no longer just a beverage company, it is now a food company after change of and merging of businesses from Tata Chemicals. Mr. D'Souza, good to have you back on ET now. Thank you for joining us. Hope everything is fine with you, your family and with your employees.
Yes, absolutely. And it's a pleasure to be talking to you.
Well, I'm just going to put a context here, Mr. D'Souza. What we've done is that we've looked at how there has been a change of guard in a few FMCG companies and how stock markets have really reacted in the first year of the change of guard and couple of years after that. And you will be delighted to hear that when a change of guard happened at Britannia, Nestle, even Dabur, the stock market reaction has been positive. And you've taken over Tata Global Beverages or Tata Consumer about a year ago, and the stock market reaction has been quite positive and shareholders are very excited.
Thank you. Good to hear that. Yeah. The key is to keep delivering results to make sure that the momentum continues.
So let me start with the obvious question, which is that what is your understanding of consumer demand in the COVID world? Are you somewhere surprised with the ability, willingness and the power of consumer to make a comeback? Because every company is now indicating that demand either is back to pre-COVID level or it will be back to pre-COVID level very soon.
So before I comment on the future, just wanted to take probably 20 seconds to just summarize the results that we've delivered and the scenario within which we've delivered those results. We delivered what, 2,700 crores of top line, 13% growth, 436 crores of PBT, which is up 42, and group net profit 346 crores, up 82%. We reduced operating capital by 5%, delivered 700 crores of cash, and we are now sitting on close to 2,000 crores of cash. Now, there were four significant items which impacted the quarter, and some of them are going to carry forward, and that's the reason I'm alluding to that. Number one was we are focused on the integration. Like you rightly mentioned, Tata Global Beverages has now transformed to Tata Consumer. It's now a food and beverage business. We're bringing two highly successful businesses together and trying to create a platform which can then give wings to the aspirations of the Tata Group to have a larger play in the FMCG space. So this integration, we've completed a structure. We've announced the entire structure across the organization. We've defined our systems, common systems and processes. We've started work on our S&D about a month back, but still a lot of work to do. And most importantly, we've scoped out our synergies, and now we will start to deliver against them because we put out a guidance out there on the synergies pieces. We've also completed the acquisition of NourishCo, which gives us an entire new platform in the liquids and out-of-home business. We've done all this while tackling the volatility of commodity prices. And most importantly, like you rightly mentioned, with this entire new world of the pandemic and the COVID-related disruptions. Now, during the COVID-related era, I would say we are seeing significant changes on three different pieces. Number one is the consumer. Initially, we have an international business and an India business, and initially it was a tale of two cities. Initially, we saw a huge spike in demand in the international markets because of pantry stocking, which is now starting to normalize. Some markets like Canada continued for some time, but this month we're seeing them come back to normal. India went through a significant dip just because everything came to a halt, including movement of trucks, logistics, etc. But after that washout, if I may, of April, May and June, the momentum has continued. So that is one piece. Second piece is we are seeing significant shifts in channels. Consumers are adapting to digital far faster than what it was earlier. I would say probably it's a 5-year leap, 5 to 7 year leap in terms of trends which have happened. And the Kirana has had a rapid comeback. Third piece is initially while consumers went for large bags, etc., Now we are seeing smaller packs again back in fashion. I wouldn't yet go to that term of whether they're down trading, value buying, etc. I think slightly too early to tell. And the last piece, I would say definitely we have a positive rub-off is consumers are going after trust, and therefore we are in a sweet spot of carrying the Tata name and playing in categories which are unbranded, and therefore we are seeing a shift out there. So all in all, we've delivered a good quarter, but we are still seeing a lot of unknowns, a lot of changes out there in channel, consumer, etc. How many of these will stick as we move forward? I'm not sure, and I wouldn't hazard a guess at this point of time. I know a lot of people are putting out various hypotheses out there, but I think the key for us is to remain close to the ground because there are still a lot of unknowns. Make sure that we judge which trends are fleeting and which trends are there to stay, and make sure we adapt according to that.
So let me frame my next question slightly differently. If COVID would have not happened, what would have happened to your financial numbers?
Your guess is as good as mine. I would think we would have still delivered a good set of numbers because all in all, I think we've started to get the right factors into play. And let me allude to that in terms of what we have defined as our building blocks going forward. Some of these are already come into play. Some of these will come into play. So the 6 building blocks that we've defined for the longer term. First is growth in core. We are playing in largely in tea and salt, internationally and domestically in tea and domestically in salt. These are large unbranded categories. We've got good, decent share positions. The shift from unbranded to branded will happen, and it is happening. COVID probably accelerated that a bit. It would have happened even without COVID. And we have scope for market share gains. By the way, we've gained market share during the quarter in tea domestically. So continuing that. Continuing to accelerate that with sales and distribution and firing our A&P fuel, if I may. Making sure that we are growing in the categories of Sampann and coffee. Sampann is a whole new wide open space, if I may, and we've delivered more than 50% growth in the Sampann additional categories of pulses, spices, etc. I think there is more room to play there. Second pillar, I would say, is transformation on digital and our innovation agenda. Now, innovation, I would say, we've started the work. The pipeline is full. We are right now in the middle of integration. We need to get our S&D systems in order before firing innovation. So in the next 2 or 3 months, you will see a significant uplift on innovation. Third is synergies. I think we put out there saying that we will deliver about 2 to 3% synergies as a result of the integration. Well on track. About half of them will come on cost, which will come earlier. The rest will come over a period of time as we get our entire S&D systems together. But I would say more or less on track. Maybe we'll surprise ourselves on the upside on those pieces. And then keeping a tight focus on costs after that. Number 4 is a future-ready organization. We've already created the structure. We put in the structure middle of May, and that's already playing out, if I may, with clear focus to drive digital, innovation, e-commerce, all the pieces that are going to be critical in the future. Exploring new opportunities, both organic and inorganic. Inorganic, specifically M&A. So we've already done the NourishCo piece last quarter, and we keep our eyes out for what else we can bolt on in our journey to become a full-fledged F&B and then a FMCG company. And of course, we are part of the Tata Group. We are very, very conscious of the communities and the societies that we operate. So continuing to do that. So a lot of these pieces have already fallen into play. And some of these have contributed to the delivery last quarter. But let me leave you with the synergy piece is still not kicked in. Synergy piece will only kick in, I would say, middle to end of September and will really play off in the second half of this year. And that is when you'll see the bottom line starting to move up significantly. That said, some of the synergies we will redeploy to A&P, some of them we will drop to the bottom line. By December, January, we should have a S&D system which is very robust. The target is to double our reach, direct reach in the next 12 months and double our total reach in the next 36 months. So it's been a journey. Started, I would say, early April and we will continue for the next 12, 18, 24 months, so to speak. So some part of the delivery was a result of putting the right pieces into play, not all of it. Some of it was also due to COVID-related disruptions. The fact that we were a national player, we got our supply chains out there. We started focusing on making sure our supply chains were up and running. Tea, especially buying, making sure that the stocks were right. But going forward, I think there are a bunch of things that we are doing which will continue to deliver good results.
Okay. A question which has puzzled investors, analysts, everyone who tracks Tata Global is that you're a Tata Group company, great brand, formidable market share in the tea business, formidable market share in some other categories, but your return ratios are nowhere close to what other FMCG companies currently are commanding. What are you doing to address it? And every Tata Group company has aspiration to be the best in the industry or in line with the industry averages. When will you come in line with industry averages?
So let me say that we are acutely aware of our return ratios, and the return ratios, I think specifically if you allude to it, is return on capital employed. A lot of that has to do with the goodwill sitting on our books, but that is history. That is what we have today. I think the critical piece is for us, and that is the focus, is to make sure that we are starting to deliver accretive margins. Going forward, we will make sure that the deliveries which are happening will improve the ratios from here on. It is a journey. And like I said, we've identified 6 clear building blocks: firing up the top line with the growth in core, transforming the whole way our supply chain operates, bringing down working capital, tighter inventories, lower costs, more focus on the new growth channels, the new profitable growth channels. And of course, M&A, a lot of M&A pieces which will come in. Because once we have the base S&D system, the base backend, then it is just bolting on categories, and hopefully all of that will drop to the bottom line. So yes, we are aware that our ratios are lower, but the whole objective is to start moving it north. It's already happened last quarter. I think we moved roughly around a point on the return on capital employed with goodwill. Without goodwill, we moved about 3 to 4 points. So significant improvement on that piece for a quarter per se. But when all the pieces start firing together, I think you will see them starting to move north.
Divide Tata Global into 3 businesses. First, the domestic business, which is a combination of salt and tea. Is it conceivable that you will grow in double digit there from single digit? And is there scope for improving margins there? Because your market share is already very high, but can you grow on margins and market share both there?
So let me take it in 2 or 3 pieces. Our aspiration, currently we are a highly tea and salt business, but we've got significant growth categories. We've got a Sampann, which is in the kitchen portfolio, if I may. Today we have pulses, spices, mixes, and like I said, while last quarter overall the food business grew about 19%, the Sampann portfolio grew 50% plus. So significant uplift on that, and we will continue to press the pedal on that. We've got a coffee. I think we have not sort of given it the due weightage, and you'll start seeing focus on coffee. Apart from that, we bought the Nourishco business, which actually Nourishco, the JV just operated in 20 to 25% of the country and delivered about 180-200 crore top line. So as we expand to the rest of the country, I think you'll see significant uplift out there. So that is in the existing pieces. Now, specifically your question on tea and salt per se. In tea, we have a 20 plus or minus share, 20-22 share. In salt, we've got all in about a 30 share. But you've got to remember that is in the context of having a 40% unbranded piece in tea. And in salt, mostly the competition is locals and regionals. Now, tea per se, I think we've got the right products across the entire positioning / price ladder, if you may. I think 2 things need to be done very clearly. We need to expand our reach because that is where competition leads. And I think if we close the gap, if I do the math for the same store sales, if I expand reach, I think I will catch up, if not take a lead on the share front. That's on tea. And of course, keep the focus on moving the unbranded to branded and fuel the brand with A&P. On salt, very specifically, Tata Salt, I think there is space to play right now. I would say it's slightly upper or slightly on the higher end of the mass, lower end of the premium. there is still space to play above on the premium piece, rock salt, black salt, salt light, dual fortified salt. I think all these things will needs to start firing. And then there is a significant portion below. We've got a brand called iShakti, which I think has still not got leveraged, which can actually take out the mass at the bottom. So all in all, I would say there is enough space to play. The critical piece is, and that's what I keep alluding to, is getting our execution right. And that is why the big focus on getting our S&D system right. Because today we reach about 2 to 2.5 million outlets, but a large portion of that is through passive and wholesale. The idea of significantly increasing our direct reach is, as we go beyond just the core tea and the core salt, as we expand our portfolio, I think it is critical for us to go direct so that the smaller SKUs will start getting the due weightage in the salesman's mind space and getting onto the shelf. And if we power that with A&P, I think we'll have good consumer offtake. So once we get that direct reach in place, I think you will start seeing the smaller pieces play out. And therefore, we remain confident of delivering double-digit top line.
Okay. So I just don't want to get this one wrong. When you say you are confident of delivering double-digit top line, you are referring to your tea and your salt business, right?
I'm referring to the total business. Yes, I mean, tea and salt is an integral portion of it. We will continue to push tea and salt because that is the base ultimately, and that just for this thing, it is unless we get that right, we will not be able to deliver the whole algorithm.
We've had almost 18 months of very benign inflation, but looking at the latest CPI data, where if demand is come up and supply is not there, that means inflation is coming back. If inflation indeed in the food category and the categories you represent is back to 5, 6, 7%, will that change anything?
I don't think it will change anything. Just as a perspective, even last quarter, I think overall consumer inflation is one piece, but we've seen significant uptick in tea prices, for example, right? And we've delivered our results despite that, and we aim to deliver results despite the fluctuation in the commodities, etc. So inflation, I would think we just need to take it into account. We need to take into account the cost per se, make sure that we are translating that into price pack, if I may, because that is a tight line to watch. We've got to make sure that we take demand elasticity into account, we take competitive response into account, and make sure that we are walking the tightrope on the margins. Ultimately, the bottom line is a function of top line and margin. So that equation, I think we've got to calibrate on a regular basis to make sure we're delivering these results.
Okay. How will you ensure that the international business is no longer a drag? We understand that you're not looking at divesting anything there, but how will you ensure that your aggregate and aggressive plans in the domestic business in food and tea and salt don't get dragged because of Tetley and some other international ventures?
So let me first say that we do a regular review of the whole portfolio per se. And pieces which are not fitting into our long-term plans, we do look at what to do with it. So this company has taken actions. We walked out of China, Russia, and just January this year, we walked out of Czech. So it's a constant, jigsaw puzzle, which we keep playing to figure out that the pieces are fitting in right. So that's one piece on the overall portfolio. The second piece on the international front, I would beg to differ, saying that it's a drag because right now, we've defined our core as the US, UK, and Canada. All of them delivered double-digit growth, and the international business delivered upwards of 50% bottom line. So the international brand is on a decently strong footing, delivering good results, stable results, if I may, and a very strong cash generator for us. Now, the critical thing is that we've got decent share positions in the markets that we play in, whether it is Canada, UK in tea, or the US in coffee. I think the critical piece in the international business for us is to make sure a lot of the things we need to do is similar to the India business. Big portion of that is transforming on digital, making sure that we are powering the e-commerce engine and playing with the consumer on the digital piece. The second piece is innovation. I think we've got a lot of brands out there which can be lifted, shifted to drive incremental results. So just as a perspective, we've just in the month of May, we've launched the, let me step back. In the UK, Tetley, what you mentioned, Tetley has got a very strong position, decently strong position, but it is primarily a everyday black tea. And the gaps are in fruit and herbal and specialty. Now, Tetley, unfortunately, we felt could not make that jump into those categories. So we've had this brand called Good Earth in the US, which we've launched exclusively at Sainsbury's in the UK, playing in fruit and herbal and specialty, and we've seen great results. Similarly, we had this premium brand called Tea Pigs in the UK, very, very strong brand. We have now taken it to the US and we are seeing good results. I think the critical thing is to leverage our brands, drive the innovation right, and make sure we are connecting with the consumer on the right platforms. And the international business will continue to be a stable, cash-generating business for us.
Food business is the high growth business. You mentioned the pulses business. Markets know about it. When do you think it could be $1 billion business for you?
If I wish, it would be as fast as possible, but I would say one step at a time. Right now, we've made an entry with Sampann, and Sampann is in the kitchen, if I may, because if I split food into three pieces, there is in the kitchen, there's on the table, and on the go. Sampann is our in the kitchen brand, and right now our aspiration is for Sampann to be helping all the chefs, all the cooks in the kitchen to find every ingredient that they need on their cooking journey. Right now we're in pulses, spices, mixes. We will expand the portfolio. The idea is we will be launching products, and I alluded to jump shifting innovation. I think the biggest innovation lever you will see being applied to is the Sampann/foods part of the portfolio. And you will see that expansion happening. We will do quick pilots, figure out what is working, and then scale them quickly. So that's one piece. But you will also see us looking for inorganic spaces, inorganic growth spaces. So we will be looking at bolting on options as we come in for things which specifically we cannot do or we cannot do fast enough. But again, as you alluded to, we've got, you talked about the return margin. So going forward, we will make sure that if we look at M&A to expand the food spaces, we are very, very clear about what we want to do. We will apply a strategic lens and a financial lens. The strategic lens very clearly identifying the gap that we need to fill from our side, whether it's a brand, it's a channel, it's a technology, it's a team, etc. And then, of course, it needs to pass muster on the financial metrics to be accretive, because like I said, we intend to move our return ratios up. And for that, gross margins, IRR, etc., need to be very clearly passing the hurdle rate. So yes, both organically with Sampann as well as inorganically, you will see us accelerating our ambition on food.
Can you define the hurdle rate for us? Because for every company, the hurdle rate is different. What is the hurdle rate for Tata Consumer?
I would just leave it by saying we've got decently high hurdle rates, and it is a tough muster right now.
Okay. So if I summarize, and last two questions, if I summarize by saying that you're optimistic because you think the salt and the tea portfolio will be able to benefit because of market share gain and synergies. Your food business is the one where top line growth would come, and international business is where the stability would come in. All three put together along with innovation will give a bump up to top line and operating leverage. Is my summary correct?
Broadly, yes. Also, the bolt-ons that we will do or the other spaces that we would enter. I mean, that is the only addition that I would make. But yeah, it's a great summary that you put out.
When I was in my school, the company was called Tata Tea. When I started my career, it became Tata Global Beverages. Today, we are calling it Tata Consumer. This is the only Tata group of company which has seen so many avatars. Why?
I think over a period of time, we've moved up the ladder and moved into a larger and larger ambition, if I may. So what started as Tata Tea was only selling tea. So we had the tea gardens historically, where we figured out that if we pack the tea and sell it out, there is a huge market, and we actually transformed, or rather completely jump shifted the unbranded to branded journey for the Indian consumer. Over a period of time, we realized, that is a limited space, but we've got the Tata brand name with us, which can be leveraged far beyond. And therefore, we started entering more categories, but again, restricted to the beverage spaces, both liquid and packaged. But now, I think the ambition of the Tata Group is to become a very, very significant player in the FMCG space. And in line with those ambitions, we've relabeled it as Tata Consumer Products. So, which means effectively our ambition is to become a full-fledged FMCG company. Right now, we've started with integrating the food and beverage pieces, the Tata Global Beverages with the consumer products business of that we acquired from Tata Chemicals. But now we will start moving on to the larger FMCG space, if I may, moving out to adjacencies and becoming a larger F&B player, and then branching out to a full FMCG company. Right now, like I mentioned, the work that is in process is to make sure that we've got the right organization structure, we've got the right S&D structure, we've got the right backend, we've got the right talent to make sure that the platform is right for us to catapult from where we are into the larger F&B and then the larger FMCG space.
How has life changed for you? Looks like it's back to where you started from. You started with Lipton, then you were managing Whirlpool, now Tata Consumer. So life is a full circle, isn't it, Mr. D'Souza?
Yes. So I effectively, say 20 years back, I started my Hindustan Unilever, Lipton, selling tea and then coffee. I was back to selling a part of that. But it has changed a bit and it has not changed a bit because I've always been in the consumer realm, if I may. So consumer, marketing, positioning, S&D, I think all those basics remain the same. It is just that it is a newer set of variables to play. What has changed is that I took over on April 4th in the height of the lockdown. So if I may, I started off on the roller coaster at the high end with a 100-meter drop. And now I'm starting to come out on the other side and see some sort of stability.